Hello YouTube, hello traders, it's Victorio from TRADEPRO Academy, and today we've got another special video for you guys. It seems like we're at a point of the year where we're transitioning seasonality and volatility. So currently we have started to edge towards summer, and we may have passed that early year volatility and fast moving price action in the markets due to a bear market, which has now come into that summer trading that we're experiencing. So in this video, we're gonna take the dullness out of summer trading and show you how you can actually earn a decent living or earn big trading in the summers made easier with less volatility. So before we get started with this video, I'd like you guys to drop a like, smash that subscribe button, and comment down below what do you guys want to see, what are you guys expecting to see in this video. So what do you want to see in the coming video? So let's go ahead and get started with this intro, and we'll see you guys shortly. First, what are slower and low volatility markets? They can usually be attributed to seasonality. Summer markets, in general, see a slowdown in trader activity and market participation because it seems that all the big fish leave to enjoy the rest of the year, just to enjoy the good weather, whatever it may be. But there is a saying, sell in May and go away, meaning there's little volatility, little volume in these summer markets, causing markets generally to move slower, especially in US equities. Now that doesn't mean we can't have movement or opportunity, even though summer trading may be a slight bit duller than regular year trading. Usually we see the die down happen towards the end of May, June, and then come back with volatility in September. For example, the S&P 500 futures market usually on average has about 1.5 million to 2 million contracts traded on a daily basis going in throughout the whole year. Then in the summer it kind of dies down to the low million point, 1.5 million on the higher end. So pretty significant change from there. Then in September it comes back to its high volatility, high movement. Even though it is summer trading, there is still opportunity. What happens is in these low volatility markets, we see a drop in the VIX throughout the summers and an increase in credit writing for credit spreads. We see an increase of newer traders trying to get into the market because they've got a lot of time, especially what's going on right now. But if you take a look at the VIX here on the screen, you'll see that generally highlighted in the red blocks, the summers are lower volatility. That means we're expecting less fear and uncertainty in the markets, but this year could slightly be different. Due to current economic conditions, we may see a little spike in volatility and a good summer all around. However, if that is not the case, this is where one can learn patience trading in the markets in these summer markets. So, I want to talk to you guys about some pros and cons about trading in these lower volatility summer markets before we identify how you can take advantage, and looking at 3 main steps where you can look to improve in your trading and your opportunity throughout these summer markets. Now, some of the cons of summer market trading, slower trading, lower volatility trading, is that you have to wait a long time for your trade to set up. You also have to wait a long time while in the trade to hit profit. So this builds on a lot of patience, builds on a lot of character, but it also messes with a lot of people's mindset when trading. They may think that they're wrong, or maybe they're right, or whatever, and get confused after waiting so much, being patient on these moves. Another con is there's a lot of chop and ranges, so we have to mitigate a lot of that nonsense and focus on the good opportunities, meaning there's a lot less opportunities throughout the day. High probability, good ones is what I mean, and we have to wait a long time for them. There are also less breakout trades and less subdued movement, which means that it's a lot harder to trail trades. You probably won't be getting those 10, 15 point trailers on futures or whatever it may be. It'll be a lot more difficult, but there still is good opportunity. So let's take a look at the pros. What do the pros have to say about this? You learn a lot of patience in waiting for those super high probability trades to set up. That is one of the biggest pluses you can have in this slower summer market. You can find stronger levels to play off if you widen the scope and just play the edges of the range. It's a great opportunity for newer traders that might get flustered in faster markets. Now they can learn at a slower pace. And there's a lot of good opportunity. If you miss a trade for the first time, you will get a lot of opportunity to get back in that same trade. It's that slow. You can see it just chop, isolate, isolate, isolate. If you have a certain level, just because you don't catch the first time, you'll get that chance to catch it multiple times after. So there are some pros and cons about trading in these slower market conditions, but I want to explain to you guys how you can easily trade in these slower markets. There aren't many differences between fast-moving markets and slow volatility market trading, but there are some nuances that you have to adjust in your trading style now that you're trading in a slower market. So number one, wait for more extreme levels of support resistance. So map it out on a larger scale chart. You gotta trust these strong levels. Whether you're trading a 30-minute, 1 hour, 4 hour, whatever it may be, map it out on that larger scale chart and identify those key levels of support resistance and wait for them. So again, if you normally trade on a 5-minute, try the 30-minute. If you normally trade on a 5-tick, try the 10, the 20-tick, and identify those key levels of support resistance and be super patient waiting for those levels because they're gonna hold to a high probability. Number two, increasing trade size. So this is a time where you can actually scale up in your trading. So for those more intermediate to advanced traders, I always want to scale up. Markets are slower now. They give traders a lot of time to make decisions and scratch trades if you want. In faster moving markets, you're probably using less size to trade because you've got a lot of opportunity throughout the day to make that daily profit target. With less opportunity, you might want to scale up the size, which doesn't necessarily mean you're taking more risk because you're mitigating that. In slower moving markets, you have to make do with the 2 to 3 opportunities you generally see a day. These are high probability opportunities. Sometimes there's more, sometimes there's even less. But it's not like a general yearly market where you have 10 to 16 opportunities, great opportunities throughout the day. So finally, you're going to have to scale up. But what does that mean? That means that you could afford to take a lot less risk in these slower moving markets. So just because you're scaling up in the contract size or your sizing means that you could also scale down on the stops that you're using. You can have tighter stops in these slower moving markets because there's not too much whipsaw head fakes and volatility getting you in stuck areas. So if you notice that it's not really confirming a level, you can scratch out of the trade for less of a loss. If you have all your criteria, you have the ability to be patient and risk less in a trade. You can afford it in these summer markets because they're so slow. So I hope you guys enjoyed all these tips in transitioning to a more slow market throughout the summer. Remember guys, you want to be a lot more patient in your trades and finding the trades. That's how you'll find success throughout the summer. Remember, there's only a few opportunities, so if you're trading in the morning right off the open, be advantageous and try and catch the first few. So with that being said, I hope everyone enjoyed this video. Drop a like, drop a comment down below. What do you guys want to see in the next video? And we'll get back to you. This is Victoria from TRADEPRO Academy, and take a look at what we've got in the end screen.